Kennedy, thanks for coming in today.
My pleasure, H.G. Thank you for having me.
Oh, you're welcome. So, what's prompted your interest in oil and gas?
Well, I actually had, there were a couple of questions. I had a couple of friends who have done very, very well in oil and gas, and I had two specific questions that I needed answered today. The first one is that, how can I derive income as an investor by investing in oil and gas?
Okay, well, that's a great question, and because people really don't understand that oil wells, once they get into production, if they are commercially productive, they continue to keep producing. Let me ask you a question.
Yes.
Years ago, you ever go on trips with your parents?
Absolutely.
And have you ever driven down the road and you've seen one of those pump jacks?
All the time.
Okay, and they're going up and down, right?
Right.
You realize every time they're going up and down, it's bringing barrels of oil to the tanks, and we get the current price per barrel from our buyer. We pay the royalty to the mineral rights owner, taxes to the state of Texas, and operational expenses for the well for the month. The rest is split amongst each of the investors depending on their percentage of ownership. And that's how you make money.
I never realized that.
Yes. And guess what? Did you see there's nobody out there?
I know. What a phenomenon. Right?
It is.
Yeah.
That's how the oil and gas business works.
Okay.
So that's how it just keeps growing and growing.
Interesting.
And that's what makes it so amazing.
It is really amazing.
Have you thought about that?
I never knew to the depth. I am well versed now with that. Thank you for sharing that. One more question for you. What tax benefits could I potentially get from that?
Well, that's a tremendous question. It's the best investment for tax benefits. And the reason is because if you invest with me and we become partners in this well, then if we hit and we put the well into production, you're going to be building that income every time that pump jack goes up and down. Okay, but at the same time, you're going to still get to deduct that investment.
Really?
Yes, sir.
Didn't know that it was possible.
Other investments, think about it. The only time you ever get to do a deduction is when you lose.
Correct, a loss, typically.
Right. And what's a typical loss? Are you familiar with that? I mean,
there's some typical from stock losses. I listened a little bit about that.
Okay, exactly. So how much is that on a monthly basis? On a yearly basis?
Generally, I heard it was $3,000.
Exactly.
$3,000. Very limited, especially if you had a big loss of several hundreds of thousands.
Correct. So there could be a loss $3,000 a year for the rest of your life, right?
Yes, long time.
Okay, well now picture this. We're in production.
Okay.
The well's going up and down. You're still going to be able to deduct what's called the intangible drilling costs in the first year.
Okay.
Now, intangible means these are expenses incurred in drilling the well that can never be recouped, that have no value.
Okay.
Okay, the drilling rig, the drilling the hole, the drilling mud, all the chemicals that go into putting the well together.
Okay.
All of that has no more value once the well is in production. So you get a full benefit, full write-off and deduction of that investment. Now that normally amounts on an average from 78 to 85% of your investment.
Okay.
Okay, so let's just say that you do $100,000 in a well with me. And so right there, that's going to give you about let's just use 80% as an average of those costs.
Yes.
We won't know until we drill each well.
Absolutely.
And then we formulate all the bills, we put it all together, and you can even see a statement of that if you want.
Okay.
Okay, but so that 80% then becomes $80,000 of a $100,000 investment.
Wow.
The remainder of your investment is called tangible and leasehold deductions.
Okay.
Tangible is the pump jack, the tanks, all of the plumbing hookups to hook everything up. After we drill the well, we put a steel liner casing in the well.
Okay.
And see, those can be resold. Those can be reused. Even the casing down in the hole, you can break the cement loose. You can actually pull that old casing out if you want and sell it, or just put it in another well if you want to go to that expense. Okay, so that intangible cost, if you're in a 35% tax bracket, $80,000 deduction first year, that's going to give you right there about $28,000 tax benefit.
Wow.
If you're on the federal side.
Yes.
Now, depending on what state you're in, these are also applicable for state income taxes also.
Interesting.
A lot of people aren't aware of that.
Interesting.
Yeah, you live in Texas.
Yes. No state tax, yes.
So we're kind of spoiled in that aspect, but particularly, I don't know if you have any relatives in California or not.
Friends.
New
Friends
York,
in
or
California, yes.
you know, any of those types of areas that are very high tax states. So it's a double good source for the investor.
Okay.
The tangible and intangible and leasehold costs, those are deductible over 5 or 7 years, which
Okay.
you and your CPA can work that out.
Absolutely.
Most people do it in 5 years.
Okay.
And then again, these are all Schedule C tax deductions
Got it.
because you are a direct participation owner in the well.
Got it.
And the wells that we're doing, particularly in this area, they're only to 4,000 feet. And we've got a couple more zones down the road, shale zones, that we'll be looking at in the future. Those are down between 6,100 and 7,000 feet.
Wow.
Obviously, a little deeper, more expensive to drill those wells, but significantly much higher potential.
Got it.
So we're just proving up this area first. You can get in at a much lower price because it's about half the price to drill a 3,800-foot well as it is a 7,000-foot well.
Got it.
Not just because it's half the depth, but because it just becomes harder and harder and harder, the rock formations and stuff we'll be drilling through.
Got it. Okay. Well, HG, I want to tell you, after your explanation, I really feel comfortable as an investor, and I'm sure that potential investors who are listening to this video right now, I'm sure that they will be confident to call you and do business with you. So thank you for your time.
Oh, thank you.
Pleasure, and
look forward to a long-term relationship.
Looking forward. Thank you so much.
Great.
All right.